How about the $20 you owe me?
Oh, yeah? Well, I only got 10, so here's 10 and I owe you 10.
Thanks.
Hey, Mo, you owe me 20.
Well, here's 10 and I'll owe you 10.
You owe me 20.
Here's 10, I owe you 10.
Here's the 10 I owe you.
Here's the 10 I owe you.
Here's the 10 I owe you. Good, now we're all even.
All right, hello, and welcome to Camel Finance. I'm your boy Camel, and today I want to start by pointing at Il Capo here, Il Capo of crypto. He says, despite all the noise, he knows the vast majority of those who follow him are genuine good people, and they deserve an update. The time away from Twitter for him has been good and necessary. He says he's totally fine, enjoying his personal life. Thank you to everyone who has shown interest. He says the price broke 25k, but altcoins didn't follow, and they are at major resistances. His system keeps telling him that the move from the lows is a highly manipulated move, mostly with BUSD and USDC, and soon the truth will come out, and when that happens, ... He remains bearish and fully out of the market. New lows are still likely. So let's be honest here. The only reason I'm bringing this up is because this is a masterclass in the importance of not being married to an idea, of having no bias, of being able to shift your sentiment and positioning on a dime. Bitcoin is up from a low of $15,700-ish, and we now currently sit at over $28,000. So this near 80% move has been completely missed through nothing more than dogma. A break above this bottom consolidation range was our first entry on this channel, and to not take a long above recapture of 18k was simply malpractice. So again, I'm not picking on Capo here. I'm just using this as a very nice example of why it's important as a trader and as an investor to accept the fact that you do not know what's going to happen. I don't know what's going to happen. You don't know what's going to happen. Nobody knows. And if you can just get past that, then you have a chance of being able to trade what's in front of you. I know I've got a few new subscribers, so hello and welcome to all of you. The channel OGs will be more than familiar with this, but if you're new here, I just wanted to point this out and say this is the expectation at the moment. So far we're right on track. We're around about 28k coming into the end of March. What I have been expecting to see from the Bitcoin price is that we make a higher high just into the six figures sometime in 2023, and then we spend the remainder of the 4-year cycle in a bear market decline. It will be the first true secular bear market for Bitcoin. Now, again, I don't know what's going to happen. This is just my primary expectation for Bitcoin. I think this will wrong foot the majority of investors because most investors will be looking left and expecting a cycle repeat. They'll be expecting to see something that mirrors the prior cycles, and that means that we go up for around 3 years and then spend 1 year in a bear market. I personally am not championing this idea. I think that would be too easy. I think the easy money is gone from this market, and I think this is how they wrong foot the majority of market participants. So as it stands, this is right until it's wrong. Now, of course, if we were to roll over and start basing, if we were to come back up to here, somewhere in the 30 to 40k range, and then have a massive correction and trade sideways or down for a while, then we'll just scratch this one off and say Camel was completely wrong about this, and we'll have to start looking left and saying, I wonder if that's what we're going to do. I wonder if we are indeed going to repeat the 4-year cycle in its standard shape and form. But if you're new here, understand that this is currently my expectation. I don't think the majority of the market would get this trade right. I think once we got up into this neighborhood, the majority of the market would be screaming for $1 million Bitcoin. They'd be screaming for super cycles. And I think this is how you wrong foot the majority of the crowd. So again, if you're new here, welcome. If you're not, welcome back. Let's get into today's episode. Massive news over the weekend. Several major banks have announced a coordinated action to increase US dollar liquidity provision in the global market through swap lines. And you can see here the list of all the central banks taking part in this. What this really means is the Fed has capitulated. Opening the swap lines is just the first of many steps. Trillions in liquidity is coming. Just see the C19 playbook. Any half-assed attempts here just guarantee more liquidity will be needed down the road. All paths lead to fiat debasement. And this is what Foss has been saying for a very long time. QE infinity. There was no other option. The only escape from the fiat Ponzi debt spiral. This is just pure math. And here, if you're a visual learner, you can see the global liquidity cycle. Here we go, starting to tick up. Okay, and we are seeing this because it's not long now before the Fed and the ECB are about to join the Bank of Japan and the People's Bank of China in their easing cycle. Remember, the Bank of Japan and China are both easing already. We even saw the Bank of England start easing in the middle of a rate hiking cycle just a few months ago, maybe 6 months ago, after the pension funds started to blow up and were going to get margin called for their bond positioning. So global liquidity is already increasing. The printer is not just coming, it's already on. I was showing this in the last few videos. This is the Fed balance sheet. Remember, they spent a full year and a bit doing quantitative tightening, shrinking their balance sheet, and just last week alone, they reversed half of the entire year's QT. So indeed, we went from inflation fighters to global coordinated liquidity swaps inside of 2 weeks. This is brought to you by the Capitulation A team, and they are those banks that I've already shown you. Some of you might be sat there thinking, well, I saw that mid-sized US banks might ask the FDIC to insure all deposits for 2 years. But even if they do this, did you know that the FDIC needs a bailout as well? This entire fiat Ponzi is built on sand. For me, the main take home here is a key bear argument is gone. There was a lot of talk about this time is different because Bitcoin has only seen QE, and central banks had stopped QE as of last year, and they had started tapering. They had started their quantitative tightening, and everyone was saying, well, Bitcoin can't survive that. Bitcoin's never seen a tightening cycle. Well, first of all, it has, and second of all, QE is back, and it's here to stay. So this key bear argument is gone. Just like that, do you remember the argument, don't fight the Fed, don't fight the Fed? Well, people that did fight the Fed did very, very well here. Of course, as we look out to this week, on Wednesday, we have the 22nd of March, which is, of course, the FOMC, and we will see whether we get a 25 basis point hike or a pause in rate hikes. Always the outside chance we see a surprise 50 basis point hike, but I really don't think that's likely given the amount of damage the financial system is currently incurring. So you better opt out and you better do it quickly. Goldman Sachs research data shows Bitcoin is the best market performing asset in the world this year. So study this and study this closely. And did you know Bitcoin successfully maintained 100% perfect network stability for over a decade now? After the $1 million bet from Balaji, a lot of people are saying that this is impossible because it would mean a market cap of just under 20 trillion. But remember, the market cap of Apple is 2.5 trillion. That's just one company in the NASDAQ. We're talking about a global monetary network, the only secure database on the planet and the hardest form of money on the planet. So anyone that thinks 20 trillion for Bitcoin is unfeasible is simply wrong. And so just before I hop into some charts for you, I left myself this as a quick reminder. This is an outside the box idea. So I'm going to talk you through this. So UBS has agreed to acquire Credit Suisse for more than 2 billion. At 2 billion, they would still only pay their shareholders 54 cents per share. And this would be a 73% discount from the close on Friday. Shareholders can't be happy. So why have I put this here? Well, call me crazy, okay? But I think it might be time to take a small position in Credit Suisse this week. And you might be thinking, who on earth would take a position in a bank that's blowing up and having to be bailed out by, let's be honest, UBS is also broke. Okay, this is the hilarious thing. This world, these markets, it's comedy. It's a comedy show. We have a insolvent bank bailing out another insolvent bank. So why then would anyone want to touch the share price with a barge pole? Am I the dumbest camel on the internet? Quite possibly. But something I happen to know about Credit Suisse, which I know I've mentioned on this channel a few times before, is Credit Suisse is a SIFI, a systemically important financial institution. This is the label that is given to entities, financial institutions that are deemed too big to fail. Therefore, they, in my opinion, they will not be going completely to zero. So if we can get in somewhere in the 20 to 30 cents range and stick it away with a small position size for a medium to long-term time frame, I think there's a potential for a 10x here. So again, this is an outside the box idea. This is heavily deviating away from my primary strategy, which of course is breakout, retest, resumption. I am a breakout trader. This is heavily deviating away from that. This is indeed an outside the box idea, but because this is a SIFI, that should ensure that it doesn't go to zero. So the question is, how close to zero can we get in at? Now, of course, this is a massively risky play. I'm not for sure telling you that I'm going to do it. And of course, if I do it, I will notify you and let you know. But I think if we can see some basing structure form, some sideways action, followed by a range break, then there's a good chance I'm going to be entertaining longs from down here. So call me crazy. If nothing else, it should be entertaining to watch. I don't have much to say about the charts because I did a deep dive TA over the weekend. So you can go back and watch yesterday's video and that examines all the closes from Friday. Now, a couple of things that weren't in that video were Apple. I have been saying on and off, if we can get a breakout above the top of this box, that will be a long from me and it will look something like this. Now, Apple appears to be working its way to the top of the range. Now, I don't know if it's going to break out, but if it does, you will see me add a long here. So if we get a breakout above this box, expect me to put a long on, expect me to tell you I've put a long on, and the stop will be somewhere in the middle of this box, I would suspect. So before I leave you with a nice meme, here's Bitcoin. Bitcoin continuing to do Bitcoin things. So not much more to say about that, apart from long and strong continue to push. For all of the charts, my approach is we need to get through FOMC. Anything that happens between now and figuring out exactly how much the Fed is hiked by on Wednesday is kind of null and void, because whatever happens on Wednesday is going to catalyze the direction, whether that's up or down. It's going to be catalyzed by the rate hike on Wednesday or the lack thereof. So if you didn't see yesterday's video, go back and watch that. That has all the positioning, all the live TA, as I said. Also, as I just said, we need to get through FOMC before we can get some true direction, in my opinion. So I'll be kind of chilling out. I'm probably going to go fishing, although it is raining quite heavily where I live. I'll be back hard at work with a video out every day this week for you, showing you how I navigate these markets in real time as a pro swing trader for free. Understand this, the printer is coming, liquidity is coming in insane amounts. It's an exponential curve, the liquidity function. So every time they print exponentially more than they printed before. If you think inflation was bad over the last couple of years, wait till the current round of printing trickles down into the system in 12 to 18 months time. In the meantime, what a week already. It's only Monday. I hope you're as excited for this week as I am. Trade safe out there, look after yourselves, and in the meantime, all the best from me. Cheers, bye.